Hi guys, welcome back. This is Sam for SAP Careers and Job Seekers Group. Today we are going to go through all the steps that you need to define for the financials module configuration, which is the FI module. Typically, you have to know the FICO module, which is financial and controlling side of the business. And FI is the first module that you start with. So I'll try and attempt to finish this in 5 minutes. Obviously, we cannot finish this in the system in the 5 minutes. It's going to take us 2 hours to finish the whole FI configuration, and we'll attempt that at a later date. But let's try and complete the FI steps, the financials, and the next video I'll follow up with the CO steps. So here we go, guys. So every organization starts with the FI configuration, and it's a mandatory configuration. FI follows a GAP, or generally accepted accounting principles, and international standard, which is IFRS, International Financial Reporting Standards. In publicly listed companies, you also have to adhere to the SOX compliance, which is Sarbanes-Oxley Act. And in banking, there's also DNF, which is Dodd-Frank Act, or the stress testing for the Basel II and Basel III. Here, we will go through the gap, fundamental gap configuration for a company. This is FI configuration, and let's go through all the steps. So the first thing in the FI configuration steps, you will have to go to the IMG, which the code is SPRO. So you will type SPRO when you log into the system, and you will first configure what we call as the enterprise structure. So enterprise structure is a two-step configuration: company and company code. So we'll define company and we'll define company code. You'll assign company to company code. So the company is the label, and code is a numeric digit which runs the program behind the scene. So all the enterprise structures is configured and assigned after defining. It's called define and assign. So define the label, in this case the company, and you define the code, which is going to run the program, and you assign the label to the code. So assign company to the company code. That's number one. Number two, you will define the COA, or the chart of accounts. So the chart of accounts is a list of all general ledger accounts that sit inside the organization. It's like when you go enter a library, you see alphabetically A to Z all the list of books. So wherever you put in the money, you have to have a general ledger account, right? If you are putting in money on the expense side, it might go into the controlling area, and it's called cost element or primary cost element. In the financial side, it's called general ledger account. So you will configure chart of account, and you will assign the chart of account to the company code. Okay, so the chart will be all the general ledger accounts, and let's divide this chart next into 6 categories, right? So in terms of GL accounts, I'm going to define assets, liabilities, income, expense, and then what we call as retained earning, so retained earning can be positive or negative. So it can actually, it's an asset, but it can be, if you make a loss and the company is a net loss, including the shareholder capital, and you do not have enough retained earning, then this would be a negative figure. And there'll be a miscellaneous account. So the miscellaneous accounts are kept there so that at the closing period of the fiscal year, you can close those. So typically you will have at least 10 of these, each one of these, 10 of these, 10 of these, and 10 of these. So these are buckets to hold the general ledger account. The asset and liability form the balance sheet. These form the balance sheet, and these form the income expense statement. So when you collate them in your financial statement, this will be the balance sheet, there will be the income expense statement, retained earnings, which is an asset for a company, and if it's negative, it can actually be a liability sometimes. So it's the only account which is a question mark, can be a positive or the negative. The miscellaneous is withholding accounts, and you settle them at end of each fiscal period. Talking about the fiscal period, so next you will define three variants. Variants are the placeholders. So the first variant we're going to define is fiscal year. The second variant we're going to define is the posting period. And the third is the field status. So let me explain what a fiscal year variant is. Fiscal year variant divides the year into 12 fiscal periods. They need not be Jan to December. In some countries, it is Jan to December. In India, it would be starting from April to March. And first time when the company starts, it can decide when it wants to end its fiscal year. So fiscal year where will be K4 typically, and then the posting period variant and the field status variant are pre-delivered as 0001 or 001, right? So you can copy those and define both posting period and the field status variant. So posting period variant is used to close the fiscal periods, right? Fiscal year variant divides the year, and the posting period variant allows you to close monthly, quarterly, and annually, right? The field status variant defines the status of the field inside a document, typically a sales order or an invoice, and it controls the status of the field. The status of the field would be of three categories typically. So the field can be a mandatory field, it can be an optional field, and we can also hide the field. So we do not delete the fields in field status variant. You can actually go and hide the field. That means it's not visible in the document anymore. So that's the number 4. Number 5, we are going to define the number range for all doc types. So there are a number of docs types. You can find them under code OBU1, and you will go and give number range to all the document types, right? So typically we copy the standard number range because you do not want to waste your time in defining number range. But if you do define your own number range and you run across an issue where number range is not available, you will have to, at that point of time, you will have to divide those numbers into smaller groups so that you have extra numbers available for your document types. So document types are invoice, sales order, purchase orders, debit and credit note. So any number that is generated when you press a submit button is a document number range, and you need to define those. So all the doc types, right? So 6th, once you have defined all of that, you are going to define accounts for retained earning. So you will define the retained earning, and then you will have to create that account in FS00 and assign it there. So that's the 6th step you are going to do, is define the retained earning and again create a GL account in FS00 and assign it there. So number 7, we are going to create customer and vendor groups. So these are also groups of customers. Sales customer are customers, purchase ones are called vendors, and you will give them a number range as well. Number 8, I'm going to define tolerances. So employee tolerance, customer tolerance, and vendor tolerance. So I'll define the tolerance for employees, overall employees, uh, and in the overall employees, you will say what is the amount you can enter per document. For example, invoice, the maximum amount might be $1 million. And what is the amount you can enter per line item? Each item can be maybe $100,000, right? And what is the variation allowed? So typically you would allow a 5% variation or a 10% variation. So in the variation, what happens is if you have that much of money over or under, you might be able to write it off. So that's why tolerance is a must define in both employees, customer and vendors. Customer and vendors is one tolerance group and employee tolerance another one. Okay, so once you define the number range, you define the customer and vendor tolerance group. Ninth, you're going to define the keys. So this key is for discount taken, discount given, and over and under payment. Over and under payment. Over and under payment. So discount taken is a key called SKE. Discount given is a key called SKT, and over and under payment is ZDI. So this typically completes your FI configuration. So FI configuration is again enterprise structure, company code, chart of accounts, general ledger account groups, defining the number range for those, defining the three fiscal variants, which is fiscal year variant, posting period variant, field status variant, then defining retained earnings, customer and vendor groups, and number range for those customer and vendor groups. Next, we will go to tolerances. We'll define employee tolerance group, customer and vendor tolerance groups, and then the keys for discount taken, discount given, and over and under payment. These are the basic keys that you will have to provide. And all the documents number range we normally would copy from the standard company code delivered by SAP. If you do not do that and you run across a situation where you don't have the number range available, you will have to divide the existing number range and take that from there. So that's almost, I would say, 80% of the FI configuration. We'll move on to the next stage after this, and that is the banking configuration. So let's talk about the bank configuration. So there's only one code for the bank, and that's FBZP. So you will have to configure sending company code, okay, paying company code. So normally companies would consolidate in one company, and the sending company code would send it to the paying company code. Paying company code is the one which will pay. You'll define the bank account and the sub account. The sub account is a general ledger account that you have created under FS00. Okay. Then you will define the payment types. Typically cash and credit. You will define the tolerance for incoming and outgoing payment, in and out, and you will define the priority of the payment, right? And last but not least, once you have defined the priority, you will complete the whole configuration set, right? And after defining the priority, and you will have to run a transaction code F110, okay? So F110 is automatic payment. and FBZP configures the payment type for F110. You might have to configure, if you're printing checks, you might have to configure forms, and that is smart forms. Check settings or configuration. So when you run F110, you can configure the smart forms for the check configuration, right? So we have smart forms which are used for configuring the output process or output document, where you can configure a form like the company name, address, and the signatory. So that typically completes the entire FI configuration, and you will start testing them. You'll start testing them incoming. So you will do FB50, FB60, FB70. These are all GL account, general ledger, general voucher transaction, customer invoice, vendor invoice, then FKMT, which is recurring payment type, which is recurring payment is like rental or credit card payments, all of those. Then payments is the last thing you will configure or test. So the configuration stops here, and this is all testing. Payments F-28 for incoming payment, F-53 for outgoing payment. So full payment, partial payment, disputed payment, over and under payment, right? All of those you will test, and finally you will configure your financial statements. Financial statement is balance sheet and income expense statement. So these are done in IMG implementation guide. All of this configuration is done under SPRO. Now you can have codes for these like OB codes to do that, but typically we will go out in SPRO and configure all of this. So hope this is a summary of FI configuration. It's not detailed configuration, but this is called baseline FI configuration. Hope this was useful for you. We will, in the next video, I'll try and do the CO configuration only up to the internal order, which should be maybe 5 to 10 minute process. And hope you like the steps that I've configured here or explained here, because this is a quick peek at the FI configuration, and it's a must know for all consultants, even if you're not from the financial background. Okay, so please like and subscribe this channel so we can create more videos like this for you. And this is Sam signing off for SAP Careers on Job Seekers Group. But before we sign off, I would like to mention that we do training, and we help you get into the job market. So reach out to our email careers, CAREERS @sapsol.com, or log in and apply at our portal hiring, HIRERIG.ai. And some of our consultants, our account managers will get back to you. We are a SAP consulting organization. We help you to get placed. And we are doing projects both in terms of turnkey implementation, license sales, as well as turnkey project implementation. Thank you guys, and we'll see you in the next video. Thank you.